Singapore's economy grew by 0.7% last year. That's the slowest full-year growth in a decade, and it's according to advanced estimates. And it is also in line with the Trade and Industry Ministry's forecast, but weaker than 2018's 3.1% figure that we saw. Growth for the fourth quarter came in at 0.8% on year, a slight uptick from the previous quarter. Some economists say that there are signs of a recovery in the quarters ahead, though. Brandon Tanoto tells us more.
The manufacturing sector was the star of the Singapore economy, but it failed to shine in 2019. Dragged by output declines in the electronics, chemicals and transport engineering clusters, it fell 2.1% on year, a further decline from the third quarter's 0.9% contraction. Still, some economists remain optimistic about a turnaround. They point to new demand for components as 5G networks begin rolling out worldwide and as artificial intelligence technology becomes more common. However, the recovery may be tepid as it hinges on the outcome of global uncertainties like the US-China trade tension.
Although the Phase 1 trade deal between the US and China does mark a significant de-escalation of this trade dispute, but it doesn't mark the end of the trade war. Do bear in mind that high trade tariff remains in place, and this will continue to weigh down on global trade flows and henceforth on the manufacturing sector. And Singapore being such an open economy that is very dependent on trade would definitely be affected.
It's a more positive picture in other parts of the economy. Singapore's services sector expanded by 1.4% on year, lifted by the finance and insurance sector. Construction also grew 2.1% as public sector construction activities continue. These sectors are expected to sustain their growth this year. The government expects 2020's full-year growth to come in at between 0.5 and 2.5%. Now, economists say all eyes are also on the upcoming national budget, which will be delivered on February 18, where Deputy Prime Minister Heng Swee Keat is expected to announce a slew of measures to support businesses and workers.
Well, this upcoming budget will actually mark the fifth year of the 5-year cycle in Singapore. And if you do account for the first 4 years worth of accumulated surplus, we actually will see over 15 billion of Sing dollars worth of surplus that we have seen in the last 4 years. And that would actually mean that the Singapore government has about 15 billion or more to actually inject into the Singapore economy if needed.
I do expect, quite a sizable proportion will be focused on, persevering continuing with this long-term economic transformation of the economy.
In his New Year message, Singapore Prime Minister Lee Hsien Loong assured that the upcoming budget will also help households to cope with living costs amidst a global economic slowdown.